what do we do with the packaged food stocks now that they've rallied so hard off their lows, thanks to the recession-proof nature? I think you need to be very selective about the ones you own at this point, both because the Fed's about to start cutting rates, something that tends to make the food stocks go out of style, the Wall Street fashion show, and because so many people are taking these GLP-1 weight loss drugs. These revolutionary injections reduce your cravings for all sorts of things, especially junk food. Still want to eat it, but you just don't crave it. So you'd think that the snack food stocks would be the worst of the bunch, right? But that's not always the case. Take Mondelez International, which is best known for its portfolio of cookie brands. Think Oreos, Chips Ahoy, and cult favorite Tate's Bake Shop. See a lot of them in my closet, which I've been eating since the days when they were still called Kathleen's Cookies, and I lived in the summer in Southampton. Mondelez also has a ton of candy brands like Cadbury, Milka, Toblerone, giving them the #2 position in chocolates, right behind Mars. On top of that, you got Ritz Crackers, Triscuits, Wheat Thins, Sour Patch Kids, for good measure. Somehow, even though Mondelez is pretty much the closest you can get to a pure snack food play, the stock's behaving as though the GLP-1s don't even exist. It's only a few bucks from its all-time high. Look at this. So what's behind the surprising resilience is what I'm using as a word of Mondelez. At an industry conference last week, CEO Dirk Van de Put, who's real good, was asked why this business has been so steady over the past few years, even during tricky periods. And he pointed directly to the focus on cookies, chocolate, and baked snacks. He was very confident about the growth prospects for each category, in part because Mondelez has the best brands. A lot of that growth is coming from emerging market countries where most people won't be able to afford the GLP-1s, although he never mentioned that explicitly. However, he sounded incredibly confident about the company's long-term strategy. At the same time, though, Mondelez hasn't been putting all its eggs in one basket. Lately, they've made some acquisitions to bulk up their exposure to healthier categories like protein and energy bars. Now, I wouldn't call energy bars that healthy, but compared to Oreos, I mean, they feel and look a lot healthier. When you look at the 8 major acquisitions that Mondelez has done since 2019, 5 of them for healthier brands, so they're repositioning the portfolio. And this started before anyone had even heard of a thing called GLP-1 weight loss drugs, permanently changing our eating habits. Just as important, these guys have been relentlessly focused on controlling costs. Not exciting, but the margins held up surprisingly well, even when inflation was rampant in 2022 and 2023. Very impressive for a food company. But does all of that explain the action in the stock? In a different market, yeah, maybe. Right now, though, Mondelez has been roaring because Wall Street's embraced the food plays as recession-proof stocks that should work in a slowing economy, which, of course, we have. Now, I think that's actually a dumb thesis because the Fed's about to hit the accelerator on the economy next week. But the market does a lot of stupid things, as we know, like yesterday and Friday. I mean, it's just, look, the market's dumb a lot. Mondelez has left its full-year forecast basically unchanged since January, but the market was a lot less excited about those numbers in the spring. Back in April, the company reported inline sales, decent earnings beat, but Wall Street seemed disappointed that management refused to raise the full-year forecast. However, when Mondelez reported again in late July, posting a small revenue miss and a solid earnings beat, they finally threw the bulls a bone, saying they expect their organic sales growth to come in at the high end of the previous 3 to 5% range. That's very good for a food company. Didn't change the earnings forecast, but this time the market lapped it up. Management also had some encouraging things to say on the conference call. First, the company's now finished adjusting prices in Europe after some hikes earlier this year. They can still get away with that stuff over across the Atlantic. North America, though, consumers are pushing back, so Mondelez has had to find ways to offer better value. The company's been very good about selling smaller form factor sweets, which are, by the way, a dream come true for GLP-1 users. People who take these drugs still have a taste for snacks. It's not like Oreos start tasting bad or anything. It's just that you no longer crave them. You just like them and find it very hard to eat them in large quantities. But they're still comfort food. In a GLP-1 world, those who capitalize on small form factors, smaller bags, will get the most customers because GLP-1 gives you the willpower to, let's say, not eat a huge bag, but feel comfortable with a small bag. Second, Van de Put had a very positive view of the snack market. Listen to this, quote, while many food and beverage segments are continuing to experience softness, snacking remains relatively durable, end quote. He goes on to say, quote, overall, we are seeing volume growth start to rebound as inflation cools. Consumer incomes are rising, which helps to reduce the inflation-driven financial strain on many households. As a result, private label growth in our categories is decelerating, while branded share growth is improving, end quote. Wow. People are trading back up the Mondelez portfolio of high-quality brands. Maybe that's why my wife likes that yard-long Toblerone so much. Oh, and let's remember that many people who used to go to the central office to work now like to goof off at home and snack their darn fool heads off while pretending to click keys and doing things that are only tangentially related to the jobs. God love them. I couldn't get away with that stuff when I was younger. Which brings me back to the key question. How can Mondelez, almost a pure play on snacks, keep performing this well as GLP-1 spread throughout the population? Like every other packaged food CEO, Vanderput says he doesn't see a major impact on the business. However, this guy's going into more detail than any other food CEO. He's actually modeled out the potential impact from these weight loss drugs. Mondelez thinks that within 10 years' time, the GLP-1s might cause a 0.5 to 1% hit to the company's volume. Rather than an apocalyptic problem for the snack food industry, these guys think it's negligible. Consider the GLP-1s as diet and exercise that works. So you eat in moderation. So if you're eating mint chocolate, that's HUE, mint chocolate bars, well, you save some for later because they're so darn good. In the end, that sounds pretty optimistic to me, but at least they tried to address the issue. Still, let's think about this. Even if management's wrong and Mondelez is truly being hurt by the GLP-1s, it's clear the higher-end snacking category is so strong it can keep thriving regardless. It doesn't hurt that Mondelez remains an incredibly well-run company, one that can deliver consistent performance in a choppy environment. Earlier this year, there was this gigantic spike we covered in cocoa prices. It was obviously wrong, but you hardly notice if you looked at their earnings. This company's been able to put through price increases where needed, but also offered new value options via different form factors and packaging, which has helped some of their brands take top share. It's a well-oiled machine. And listen, I cannot force Mondelez to admit that it's being hurt by GLP-1s if they haven't seen it. What do you have? Like, I don't have a subpoena or something. In fact, while self-serving and perhaps excessively optimistic, Vanderput's estimate of 0.5% to 1% impact in 10 years is some of the most specific commentary I've seen from any packaged food company. Most won't even talk about it. They say they have studies. At least he admits that a certain percentage of the population can't eat as many Oreos as they used to. They can still chow down on a foot of Toblerone, though, but not 1 inch more. So, the bottom line. I commend Mondelez and Dirk Vanderput, the CEO, for taking this issue more seriously than their rivals. Ultimately, this is, though, a terrific business, but the stocks went up dramatically. So if you want a piece of it, wait until the Fed starts cutting rates and the packaged food stocks will most likely pull back, maybe hard, because the run of Mondelez is hard to justify in a world where the Fed's stimulating the economy. But longer term, a well-run snack food company is a great place to be, as we saw from those who own Kellanova before it got that huge bid from Mars, the food company, not the planet, although it sure felt like that bid was from way out there somewhere. I say we take calls. What do you think? Let's go to Susan in California. Susan.
Hey, Jim. How you doing today? I'm sure doing great. 'Cause you always got such a great attitude.
Well,
hey,
you know, I like my job. I like my job. Now, that should not be held against me by the bosses. If they were watching, they'd probably think, let's give Cramer an immediate deduction or something. But no, I don't have to worry about that. What's going on?
What's going on? So my favorite store in the world, and I was at it yesterday, is Costco. And I have 2 questions for you. One is related to the dividend and the yield. I was comparing it to my other kind of floppy stock, Disney. And Disney seems to have a better yield. I may be wrong. In comparison, is Costco's dividend a fair amount for what it is, what its price is presently as versus, and also how do you see it down the road?
Fabulous question. Now, remember, Costco pays a special dividend. That is really what a lot of people live for. We are very happy with that with the Travel Trust. That's a very big dividend. And also, remember, Costco is a volume game. In other words, they try to not do price. They try to make it on the card, and they raise price of the card. So they're doing everything they can to return money to shareholders, but at the same time, never sacrificing the real owner of the company, which is the shoppers, which is the way I always view it. Now, of course, shareholders are actually the owner, but you know what I mean? They are trying to make money. They're trying to make it so that it's not as expensive to live. And I applaud that over and over again. James in New York. James.
Booyah, Jimmy Chill. What's going on?
Man, I'm chilling. How about you?
All right. Go Birds. Was hoping for an all-green Super Bowl, but my Jets put a damper on that last night.
Well, we don't know. We don't know.
Yeah.
Look, we just hope Howie Roseman's got it going. We want Howie to have it going. How can I help you?
That's right. Hey, at least we got the Mets anyway, you know?
Yeah.
Totally.
Hey,
also, I never thanked you. In 2020, you recommended Regeneron. It's been a 3-bagger for me.
Well, I recommended it $5 in 2005. I saw Len Schleifer releasing in the street, and I just thanked him for everybody who watches the show. What a homer!
You're the man. So, Jim, I'm blessed with 4 beautiful women in my life. My daughters, Christina, Kimberly, and Catherine, and fiance Deborah. They all use this consumer product every day. Wherever I look, it's in the house, it's in their apartment. All right, the company has a forward P of 33 and a revenue growth of 50%. 16% of their sales are international with the weaker dollar. The average analyst price target is 220. That's 100% upside. The downside is it's off 104% from its high. 1 month, 33% down, 21% down in 5 days. Jim, the question here. this holiday season, we will be enjoying the Will Ferrell movie Elf. I love that movie.
Well, it's a good movie.
Will we be enjoying the stock price of Elf?
All right, there are people who I think are actually pushing this stock down. I am not kidding. I think this is a short rate. I think the company's doing incredibly well. The category, though, is from Hades, as we know from Estee Lauder. So what I suggest, because it's 31 times earnings, I say about a little bit and then let it come down. Let the shorts work for you. That's what I always used to say. Why complain about the short sellers? Let them work for you and get a better price. And I sure do like your attitude, by the way. Now, I also like Mondelez. I like it's taken the GLP-1 issue a lot more seriously than the other guys. It's part of what makes me a fan of theirs, both their business and their stock. And I like those huge chocolate bars. Now, much more Mad Money, including my Wingstop talk about hitting it out of the park. I'm seeing the stock will continue to be a winner chicken dinner when I sit down with the CEO. Then I am sick of the Apple hating. I'm taking all those haters on. I'm sharing why I'm excited about yesterday's product announcement, and I'm right and they're wrong. Little hubris there, perhaps. And all your calls rapid fire tonight's edition of the lightning round. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.